Good morning, traders. Happy Friday. It's the 28th of April, 2017, 8:03 a.m. Chicago time, 9:03 Eastern. Thanks for joining me. This is another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Now, just to start with, I'm losing my voice, I think, so it might come off cracked and squeaky at some points. I apologize for that. It's unfortunate because today I'm doing a video broadcast with the CME. We'll see how that goes. Hopefully, my voice holds on until then. I have to keep clearing my throat and your ears. Again, I apologize. Um, the overall market stands today, crude leading the pack up 0.96%, 46 cents, trading at 49.43, followed by the Euro FX holding on to the $1.09 handle, up 0.21%, followed by the Euro stocks, the Dow Jones, gold, and the S&P is pretty much unchanged, up a point. The laggards today, the U.S. Treasury bond, the Japanese yen, and the Euro bond, as well as the 10-year note. So the safety assets are lagging in the overnight session. That might change once we open. um, and that's how things are shaping up before the market open. Currently, what are we expecting for today? Looking for, well, actually, let's go over. There are a lot of releases last night. I'm not going to cover all of them. Also, a fair number of earnings releases. But there's some interesting headlines. Chinese banks are starting to tighten loans to property developers. The Chinese real estate market is very, very, very hot. We got a bunch of releases from Japan. The jobless rate dropped to 2.8% versus 2.9. Could you believe that? 2.8% is their jobless rate. It's incredible. Um, they had retail sales. We also got a bunch of numbers from France and Germany, UK. I won't cover those. The most recent numbers, the most recent releases, the Eurozone April advanced CPI estimate came in at 1.9 versus 1.8. This means it has returned to the ECB target. The core year on year is 1.2 versus 1.0, highest level since mid 2013. The Russian central bank has cut its 7-day rate by 50 basis points to 9.25, more than expected for this. This is the second straight cut, so they are in a stimulative stance. U.S. Q1 employment cost index came up at 0.80 versus 0.6. Wages are rising slightly potentially. And Q1, this is a big one. Q1 U.S. Q1 advanced GDP annualized Q on Q 0.7 versus 1.0. At 0.7, this has been the U.S. economy's slowest rate of growth in 3 years for Q1 this year. Doesn't sound so good. Um, personal consumption came in at 0.3 versus 0.9, also a big miss there. Um, and then um, what we're expecting for today, hang on, I got to clear my throat. And then what we're expecting for today, what's left for today is we're getting Chicago PMI at 9:45 Eastern. Remember, this is a subscriber number. It usually comes out at 9:42 or so. We get the subscribers get it at about 9:42, sometimes even 9:41. So what you'll likely see, and I suggest you, if you don't have much cover on your, if you're day trading and don't have much cover on your entry, on your position, I suggest you flatten it out and then get back in after the number. It could come out anywhere between 940 and 942, and you'll see a movement then, and then the market will get the number at 945. The expectation for April is 56.4, the prior is 57.7. At 10 o'clock, we get University of Michigan. This is the final number. It's not as big a mover as the prelim. Again, 10 o'clock, University of Michigan, For April, expecting 98. The prior is 98 as well. And then as far as speakers, at 1:15 p.m. today, we're getting Fed speaker Brainard. And then at 2:30 p.m. Eastern, we're getting Fed speaker Harker. And that's all she wrote for the week. So that's there. I don't see any key earnings releases after the market. Of course, yesterday we did get some big post-market, post-close releases, including Baidu and Google and so on. And we saw some pretty aggressive movement in the Nasdaq as a result. The Nasdaq pushed to 55.99, 55.99 new highs. The S&P lagged. Okay, so let's switch gears and look at what we expected yesterday versus what we got. So, based on the context that we were in yesterday, as far as what the market has done and how good of a job, the expectation was we would push up to about 23.89, and then we would likely find sellers to rotate down and through. The target below was, if you remember, was 23.75.75. That's the mid of the gap zone from Tuesday. That was left behind from Tuesday. Again, the magic number is 23.75.75, and the top was expected at 23.89. That's hypo 1. It is a sell bias. Uh, um, And then the opposing hypo, the secondary hypo, if we can't find those sellers, is for a sideways open that pushes to VPOC up to 23.8975 or so, for a pullback to 86, and then a push through to 95. That did not happen. Here's what happened instead. So we open up. Hmm, We open up. Let's put our opening swings in the right place. We open up pretty much sideways. We test to 87.50. Remember, we were looking for the 89 area. Um, and then we get the sellers. So this is hypo 1 right here. It pushes down to 78.75. We were looking for 75.75. Doesn't quite get there. For those of you in the S5 chat room, I did come on and talk about how this is failing to achieve lower prices easily. As it continued to push. So we made this low. We pulled back to where a very key area here yesterday. Beautiful confluence. This is just a beautiful setup right here. We have the prior day's low. We have the IB low, which is the yellow line. It's the first hour's low. Very important measuring stick, so to speak. The OS low, the mid, and VWAP all in the same area. And then it gave a 2.75 point rotation, which wasn't very much before it tested again. And it finally, we're looking for a lower low for the extension on this move. We finally get the extension down, but the extension down, if you watch this in the order flow, you would have noticed that it really was struggling to push lower. Um, so you want to see this almost like pushing a rock up a mountain or something. What kind of effort is the market making to achieve another another tick? For anybody that's seen a movie Any Given Sunday, the famous Al Pacino speech there, that they're going to fight for every inch. Well, if they fight a lot to get another tick, you start to see those are the early signs in the order flow, in the market's order flow. And it's a scalping kind of idea, but you can apply it to any time frame as you engage with the markets, because you have to engage at some tick. Um, and so if it struggles to push through, then you have a market that is having a hard time achieving or auctioning lower. And so it starts to give you the idea that, okay, it's probably, if you're short, it's probably a good time to cover at least a portion of your position if you haven't attained your goal. In this case, the market has not gotten down to the 23.75. It hasn't even gotten down to the gap high, which is back here. Um, uh, and so I started to look for the long. The problem is the long did work out, and you could see it's a nice big impulsive move, but there was no clear, for me at least, there wasn't a clear way to enter it. So this was a not, it's nice to be able to say, hey, caution if you're short, this is really struggling to push lower, and it's built a lot of energy. And at this point, we had a big profile down here. We had a very well-built profile. So there was plenty of energy for the move, and this was predictable. At least for me, this move here was predictable, and I did talk about it again in the chat room in real time. But the problem was I just didn't see an opportunity to get in. I didn't have anything to lean against to get in here, unless I was looking for a short-term scalp, in which case I had this zipper down here to lean against. But nothing really solid, no level that would firm up my bias for the long. And then from there, the market just went sideways. I expected an additional leg up to the 89.75, didn't get it, and the market traded sideways. We ended up with a fairly balanced double distribution profile, and the 82.75 is key today for us. I'm gonna watch that level pretty closely. We're trading up at 87. Today is likely to be very fairly quiet, relatively quiet. We're very, very likely to take out the 89.75. I believe the bottom is in temporarily, and 82.75 is the gatekeeper this morning. So I'm watching for that. Okay. Just a reminder, because it's like Friday, right? Now that I'm talking about the markets, because it's like Friday, it's really, really important if you would just hit the like button before you leave today, or at any point during the broadcast, just hit the like button. It helps out. It helps the channel out. It helps me out when I need help from YouTube. Um, so that's where we are. What did we do in the overnight session? Another pretty much sideways day, but except today, the auction is incomplete, seems incomplete to the upside. There's a shelf there and a taper down below. This is likely to continue popping higher. 89.75 is very much attainable in my opinion this morning. And if it is, and that's all we glean from from the overnight session, at least our U.S. overnight. I hate saying overnight because it makes it seem like the U.S. is the center of the universe, but I'm talking about from my point of view, from my time frame. The next area up to test is the other side of the VPOC that's open from 2 days ago, and that is 92. So I'm looking for this morning. And just a quick review of the flex levels in the area. We have our gap below that we were looking for. This is where the 23.75 comes from, right there, the mid of the gap. We had 77.75 as the MC high volume node that's been sitting there for a while. And then we are getting close to our weekly high extreme because of the gap up that we had earlier this week. We've already breached it. But overall, we don't have too much in the area holding us back. The expectation this morning is for an open auction. I'm looking for responsive selling earlier and then at base, and I'm looking for the continuation of this move up here. We're still in a flag that hasn't resolved to the upside yet. I'm looking for 89.75. I'm looking for it to get tangled, pull back, and I'm looking for 92. And then the drop into the afternoon. That's hypo 1 for you this morning. That's what we're going to be looking for. Come on, circle. Circle it. No. All right. It's going to be a squiggly circle. Anyway, so that's what we're looking for hypo 1. Hypo 2, if it does not get responsive on the open and starts to push to continue yesterday's move, then look for it to exceed through 89.75, pull back, and then continue higher, and what looks like somewhat of a trend day. I'm not expecting that too much. I don't have that as hypo 1 because we're going into the weekend. There's nothing special expected this weekend, no votes, nothing like that. And so I'm looking for this to kind of free flow. It's done its thing to the downside, in my opinion. Again, the gatekeeper here is 83. Once it moves into the slower distribution, new lows are likely, and then we push towards 23.75, which is the third hypo. The third hypo is we push higher immediately, fail to hold on, and then start to move towards 85 quarter, start to move towards 83, consolidate for a little bit, and then slip through. And now we're looking for, and this is the ideal trade, now we're looking for 23.75.75. Again, that is your hypo 3. However, knowing that it's Friday, it's not likely to go this way. But if the market does fail, I know if the market does fail, I know my targets, not the market's targets, but my targets are going to be 85 and a quarter, get short back into the range. Targets 84 quarter. Look for then a pretty decent support on the first touch at 83, at 23, 82, 83. Look for a small bounce, probably get tangled up in the point of control. Remember, the point of control is acceptance, so it's likely to see two-way action. Look for it to get tangled up at the point of control, and if it releases below 82, I need to hang on to 75.75. We're likely to take out the prior day's low, so I need to hang on to 75.75, and that becomes my target for hypo 3. That's how I'm using the hypos. I don't know which one is going to work. I'm open to all of it. I'm always open to whatever the market does. Remember, the outcome of every trade is 50-50, and it's not changeable. You cannot do anything about it. But at least when I do catch something, I'm not, taking a two-tick winner and holding on to 6 or 7 point losses. I know what to shoot for unless the market decides that it's not going to go there and it comes all the way back. Then I close the trade, and that's all she wrote. Okay, it's Friday. Just make sure you are in control of your emotions. One of the most important things to learn in trading is not only patience, like I talked about yesterday, but also to be self-aware. Be self-aware. Don't allow yourself to all of a sudden throw away your plan, not, check all the boxes you need to check before you put your trade on. Just don't throw all of that away just because emotionally you need something from the market. I'm not trying to be your therapist here, but these are issues that we deal with as traders. From beginner to the seasoned professional, it's the same thing. You constantly are fighting this impulse to do something, to be active in the market, to fight. It's important to just be aware of where you stand and to respond accordingly. Most of the time, that means not responding at all. Okay. Good luck today. Please hit the like button as you head out. Good luck, and I'll catch you on Monday morning. Take care.